Okay, welcome everyone, and good day, good morning, happy new year, and welcome to this beginner's course or beginner's guides to Forex trading. We've tagged it Get Me Trading in 3 days because it's a 3 days program. Today, Wednesday, Thursday, and Friday. So we will hope to cover and get into what it means to trade the global financial market. So you're all welcome. My name is Gabriel Ojimado, and I've been trading the Forex market for the past 10 years now. I've built my career on Forex. Reason is because when I saw the potentials in this, I said, no, this is where I'm going to stay. Because the potential is enormous. It's a market that is not manipulated by anyone, and it's free for all. It's a very transparent market, and this was the kind of thing I saw I could invest my time in and choose to learn on it. So I've trained thousands of people across Nigeria and those that are joining my seminars online, and still training, because for me this is more of a passion to see as many people as can learn how to trade the market going forward. So this is brought to you by Exco Trader. Exco Trader is a financial broker that provides technology for those that seek to trade the Forex market, not just the Forex market, indices, cryptos, and all of that. So we have global presence across the world in over 8 countries right now and still counting. Very transparent in all our dealings. So what we promise is what we deliver, and our commitment to see that our clients get the best of services when they do business with us. And of course, the most important is your financial security. So for us, everyone should be rest assured and guaranteed of their financial security, because this is one of the most important things in any transaction. How trustworthy can you trust your business partner? So we are your partners in Exco, and we are looking forward to taking you through what it means to trade the Forex market. So in this beginners course, what are we going to be covering? So it's important for us to know what the curriculum is all about. We will be looking at the central drivers of currency prices, commodity prices, stock prices. So, of course, you know, in every market, like the commodity market or whatever price or asset you want to buy, there is something that influences the price. So we're going to be looking at what is it that moves the Forex market. We'll be looking at an introduction to financial markets trading, then introduction to the trading platform, you know, getting your hands to understand how and how to trade the market, understanding trading terms and applications, understanding chart analysis and resolving trading decisions, then introduction to Trend Rider Pro indicator and its application, and then we hope to be making our first trade on Friday. So this is a basic course. This is a course that should get you grounded in the financial market to at least have an overview of what the Forex market is all about. Okay, so let's kickstart again. How many times are we kickstarting? Well, as many times as possible. What is the financial market? If I ask what is the financial market, I know I'm going to get a lot of varying answers, but all the same, you'll find out that everything is centered around a marketplace. Okay, it's a marketplace. So the financial market is basically a marketplace for trading of securities. When we talk about trading of securities, financial securities, we're looking at bonds, things like stocks, things like treasury bills, things like currencies, and the likes. So this is what the financial market is all about, a market, a meeting place, all right, for trading of these financial securities. Now, it's also a place where people with excess funds meet those that want to borrow these funds. Just like, you know, in the capital market also comprises of the financial market. You know, this is where many people, even governments, get to seek and get loans from the capital market, if you understand how the capital market works. So the financial market is even bigger because it's really, really, what do you call it? There's much more money in the financial market than you can even have in the capital market. All right. Now, when it comes to the in forex trading, that's currency trading, you can understand this term by what is called leverage. Okay, by what is called leverage. So when you're coming into the financial market, that's where we're breaking it down, coming down to just trading of currencies or trading of what we call derivatives. All right, derivatives. Now here you are also not, you're also having access to quick loans or quick capital, but we call this leverage. Why? Because you are borrowing money from the broker, because the broker is also connected to several multi-banks, all right, multiple what we call liquidity providers. So when you come into the financial market or to the forex market, you will notice this is one of the biggest advantage than going to the street to buy dollar or sell dollar, because on online, when you trade it through a broker, you have access to borrow money from the broker and buy much more dollar than you could have afforded, probably with the amount you funded your account with. And this is how this is one of a very big advantage when you do trading online. So we'll come back to leverage where I will explain it more, but let's continue on the basic fundamental introduction. Now, but what then is the forex market? Here in forex market, this is simply the place for traders to trade currencies. It's simply a marketplace where currencies are traded, or we can put it like this is a marketplace where the commodity, just like going into a supermarket, to buy groceries. Here, the groceries, perhaps to use that word, is money. Money is what is being traded. You buy it and you sell it. Okay, this is what the forex market is all about. It's currently the largest market in the world, controlling over $6 trillion every day. As we're seated right now, you're listening to me. Over $6 trillion will exchange hands from trader A to trader B before the day runs out. Okay, so before midnight today, $6 trillion has exchanged hands. So it's the biggest market in the world, and everybody, the money is enough to go around for everyone. So you just have to know, how do I get a little pie or piece of pie from this big pie? Okay, this is what it's all about. Now, who are the participants in the forex market? If this is the largest market in the world, who are the participants? Now, the participants are first and foremost the central banks. The central banks are the major players in when it comes to the forex market, okay? Because they are the ones that determine the rate of exchange, okay? They are the ones that determine whether they are devaluing the currency to make it weaker, or they are setting up some policies to make the currency stronger. Okay, then next on the chain are the commercial banks. It's normal banks, you know, going in to the and putting in your money for savings or current account and all of that. These guys are the second biggest players when it comes to the forex market. Okay, but people do not know. Then the large corporations, all right? Then we have the hedge funds or investment houses, all right? Things like your PFAs, that's pension fund administrators and all of that. These guys are really huge, big players when it comes to forex trading. Then we have the forex companies, that's where the brokers come into play. And then we have the last leg of the chain, which are you and I, the traders. Okay, but we cannot just go to the central banks and trade. No, we have to go through a broker who is connected to the commercial banks, and this is how these things are distributed. Now, so let's understand what how to trade, or how the forex market goes, or is being traded 24 hours, because by now you should have known the forex market is being traded 24 hours in a day. So how does it work? How is it possible that a market does not sleep 24 hours a day? Now, looking at the little chart that is on your screen right now, just take it in this way. We have what is called 4 major sections or sessions in the world. I see like 3 people raising their hands. Let me be sure. I see Victor. If you have any question, please just write, use the chat box. Innocent, Obadiah, Techno, Spark, 8P. Please use the chat box, just write. I will be happy to help you out. Okay. Now, London, we have what is called four major sessions or time zones in the world, right? Or four major financial centers. It's the London. London is capital financial capital of Europe. Then we have New York, we have Sydney, and we have Tokyo. Okay, so let's the London session, it works like the banking hours. 8 o'clock, the banks open, and by 4 p.m. they close. Now, within that time, as long as the bank's servers are on, Forex transactions is going in and out through those banks. All right. So once London opens up by 8 o'clock, the market is open. Anyway, London is not the first place we experience Monday morning. It starts from Sydney. Okay. Sydney is the first place we get our Monday morning. All right. But just twist it around. Let's just take it as if London is the first place. All right. So just take it like this. So London being, let's say, the first Monday morning dawns in the whole world in London, 8 a.m. All right. And before, when it gets to 13 o'clock, which is 1 p.m., that is 8 hours. That's 8 o'clock in New York, because we are, London almost is the same time with Nigeria. Okay, sometimes the daylight savings makes it 1 hour different. So we're 5 hours ahead of New York. Now, when it gets to New York, when it's 1 p.m. London time, it's 8 a.m. New York time. New York, 8 o'clock, the banks are open and transaction continues. When London closes by 4 p.m., New York is still running. So transactions continue from New York. You see that? Now, when New York is about to close at 21 o'clock, that is Sydney's 8 a.m. So at the time it's closing, it's switching to Sydney time. So transactions continues. And while Sydney is still running, Tokyo is 8 o'clock by midnight. That's London midnight is 8 a.m. in Tokyo. So Tokyo continues. Now notice that when Tokyo is wrapping up around 4 p.m. Tokyo time, that is when London is opening again by 8 a.m. So you see the transaction goes on and on round the clock. So it doesn't matter what job you do, it doesn't matter what kind of work you are involved in, even if you're a student, all right? There is always an opportunity to trade the market, because the market is open 24 hours a day. So you just have to choose, what do I want to trade? Do I trade after work? Do I trade during work, during my break hours, or before I go to work? There is an opportunity for everybody, all right? So let's get on. So what can you trade on the Forex market? Number one, you have the power to trade currencies, okay? So, and we have mentioned that already. Number two, you can trade indices. Okay, when I spoke about currencies, it means you can trade euro, you can trade pound sterling, you can trade Swiss franc, Japanese yen, Russian rubles, Turkish lira. You know, you buy it and wait for it to appreciate, you sell it back. Anyway, we're coming to the technicalities. I want to lay the foundation so you have proper understanding exactly how the market works. Okay. Then what are indices? We're talking about what else can you trade on the Forex market? But some people think it's only money you can trade. No, let's look at it all together. Now, indices are a collection of stocks and instruments used to track the growth or trajectory of an industry or sector. So sometimes, you know, it's very difficult to trade stocks, because for you to buy or sell a stock, you need to understand deeply what is the CEO's vision, what is the company's mission, you know, what kind of products are they producing, what is the risk, is it being accepted in the market? You know, you have to do a lot of multiple analysis, you know, to project if that stock is going to grow. But why waste your time doing stock analysis when you can buy the whole of, or you can buy the whole stocks with one currency or at one go? So that is the instrument or financial instrument we call indices. When you buy indices stocks, it's just like you're buying the whole of the technological sector. All right. So buying the whole of technological sector, it means you are buying Apple, you're buying Facebook, you're buying Microsoft, you're buying Tesla, all of them in one. So even if one is not performing well, four will be performing well. Do you see that? Now imagine when you buy things like S&P 500. This is an index, all right? Now S&P 500 is the top most 500 biggest 500 companies in the United States. Now this is the biggest. So if 100 companies are not doing well, 400 will do well. Well, anyway, when we get to the trading aspect, I'll show you how the S&P 500, for example, works. You'll see that for the past almost 20 years, the graph is just going up and up and up. All right. So this one, you don't even need to think. Just buy and leave it there. At the end of the year, you are sure to make money out of it. All right. I'm going to show you all of those. What else can you trade? Commodities. Some of you stay in a country where the main source of the country's GDP is oil, some gold like in South Africa, some farm products, and maybe you don't even have access to mine these things. Why not? You can buy all of these assets on the Forex market. You can trade oil, you can buy gold, there's a whole lot you can buy, corn, coffee, silver. You can trade all of these assets on the Forex market. What else? Biggest, newest kid on the block, we call them cryptocurrencies. You have access to buy and trade cryptos on the market. And don't forget, you are borrowing money to buy these things. So even if you don't have the money, however amount you fund, through leverage, you can borrow 100 times any amount you fund, even up to 500 times any amount you fund. So it's like you fund $100, you can borrow times 100 of that money. So you can borrow up to $1,000 on the Forex market to trade. Now, let's get into some of the things that a lot of you are familiar with, and that is the uniqueness of the Forex market or the uniqueness of financial market speculation. Now, because this is a point where a lot of people get it wrong. You've listened and heard a lot of things out there. People saying, "Oh, I've lost money trading the Forex market. Oh, it's impossible to understand how this Forex thing works." Even in the picture you see on the screen, you can see a lot of zigzag movement up and down. And sometimes it looks like it's impossible to tell what direction will gold go, what direction will, what do you call it, oil go to, or is the price of US dollar going to appreciate against the Naira or the whatever currency you are trading? Anyway, this is not gambling. This is first thing I want to tell you. Forex trading is not gambling. There is a pure probability analysis that you can use to know exactly. Well, not exactly. You cannot tell for sure, but you can have high probability entry and know that in the long term, this is where the market is going to go to. It's just logic, and I'm going to prove it to you. Let's do something here. Okay, so this is something almost everyone here can relate to. All right, so COVID-19. I want to show you exactly how we trade Forex, how we speculate that this is where the direction of the markets will be going to. So this is COVID-19, and this is the price. Let me get a writing tool here. So this is the price of gold, the price charts for gold. So gold moving up, 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 up before COVID-19. And when this was the date COVID-19 was announced to the world, or when it was discovered in Wuhan, China, on the 10th of December, 2019. And my question to you, because this is not magic, it's not rocket science, it's just who can use their logic to know, to decipher what next is going to happen. So you see, the price of gold was rising and rising, then started falling. And at the time COVID was discovered, look at where the price of gold was. So my question is, COVID is a pandemic that affected the world. Everyone knows the effects of COVID. Now, how do you think the news of COVID and the lockdown that happened in the world, the economic, how it brought economic hardship upon many people? How do you think it was going to affect the price of gold? Do you think it's going to make the price of gold go up? Or do you think the price of gold is going to crash? Question, please use the chat box. All right, use the chat box. I want to know if you think the price of gold is going to go up, please just type up. If you think it's going to go down, just type down. Let's see, let's have a guess what people think. And let's see, even you guys here, let us know. What are your thoughts? What do you think is going to be? Will the price of gold go up or will it go down? Ibrahim said it will go up. Alani said it will go down. Prince Dateme said it will go down. Jerry said it will go down. Augustine down. Suraj down. Thank you. Let's have. Okay, someone said it will go up. How about you, sir? Down. Okay. So we have more people saying down. Will the market respect the opinion of the majority? Let's see. All right. So I'm going to open. I need to clean up the whole chat. All right. So let's see. But before I answer the question, let me try to put a background to this. Now look at this. COVID-19, a pandemic that had the fear, all right, or the potential, whichever we say, to wipe out humanity, yes? Or at least 50% of the world, 60, 70, that was the big fear. Every country was locking down. Now, when people were locking down, what was happening to companies? Companies were shutting down. People were dying. The thing had no respect for anybody. You know, governors, top rich men were dying. Young, rich, poor people were dying. So people were removing their money because companies were shutting down. So their stocks were not going to appreciate. All right. People were removing money from more risky assets. All right. And if they are removing their money from more risky assets, it means that where should they put this money? They need to put it in somewhere that can secure the value of their money or can preserve it in case they die. So they put it, their children can inherit their money, something like that. You see that? And one of the oldest things that has been known to man to preserve value has been gold. It's a metal. You know, metals, gold is, when you melt gold, gold is gold. You throw gold into a pig pen with all the dirt in there, you bring it out, polish it, gold is still gold. You grind it into dust, gold is still gold. So it preserves value. So people removed their money from risky assets and they invested it in gold. And you know, you and I know from elementary economics, as we were taught, that the more people demand for any product or service, what will happen to the price? It will go up. So this was exactly what happened. So this gold saw the highest rise of value during the COVID period because people were scared that the value of their assets was going to disappear. So they were removing money from banks, cashing out from stocks, and they were putting it into solid assets like gold. And gold price rose astronomically. But as a forex trader, the forex trader saw exactly where to buy. Because on the forex market, you will see exactly how the price is going up or going down. And you can tell when we teach you technical analysis, you'll see exactly when you were supposed to buy, when you were supposed to sell. Now, look at another example. I don't think this one will be hard for anyone anyway. This is our price for oil. And of course, oil price, we saw that oil was, thank you, Jerry. Jerry said awesome logic. Thank you for that. Now, this is oil. Oil price, what would have happened to oil price? Now, I know you will get the answer, but let's still see. This is oil, and there was COVID. And again, there was lockdown. Lockdown meant cars were not to move. The planes were not to fly. Okay, ships were, well, if ships were moving, they could not dock because there was lockdown. Nobody at the seaport. So people that were exporting oil saw their oil stuck in the sea. You know, planes were not flying, cars were not moving, industries were not producing. So there was no demand for oil. And of course, you know, once there is no demand for any assets, the price will drop. It's just like taking an iPhone to the Amazon forest and giving it to a caveman. What does he know about it? It's worth nothing. But bring back that iPhone to the city center and it's worth many thousands of naira or dollars. You see that? So this is the idea. So during the lockdown, oil price saw the lowest drop in oil to a record low of $7 per barrel. And of course, many countries went into recession because of this. Nigeria was one of them. You remember? Oil price dropped to a record low of $7 per barrel. We have never seen it like this, but in 1991, that was when we had oil price drop to, I think, $10 then. But COVID made price to drop to $7 again. And I had a friend that bought it at $20. He came to the office and told me, Gabriel, I want to buy oil. I said, why not? I really support you to do this because there's no way oil will remain at this price. He even entered late. He bought oil. I think he funded his account with like $5,000, bought it and held it. I think he sold that at about $50. I remember. So imagine buying oil at $20 per barrel and it appreciated to $50 and he sold. Today, oil is, I think, about $70 now per barrel. So this is the beauty of the financial markets. So Forex traders make money in both directions. When price is falling, they sell. All right. And when price is going back up, they buy again. Anyway, I'm going to show you exactly how Forex traders make money because we make money whether the price is crashing or whether the price is rising. This is not stocks trading. In stock trading, you're only making money when the price is rising. Okay. But in Forex, you have the opportunity to make money when the price is going down, and you have opportunity to make money when the price is going up. So foundation we want to lay for you. How to understand, to know that price from this level, okay, is going to go down to this level, because as it is going down, that is where you are making your money. And we're going to teach you exactly how to know that from this level, price is going to rise up. Okay. And the price is going to rise up. You are also making money from there. So we're going to be demystifying price charts and how the market fluctuates in this 3 days course. All right. So stick with us. Stick with us. It's not rocket science, I can guarantee you. So it's not, you don't need university degree to know exactly how to trade the Forex market. So let's proceed. So let's see, why does the market fluctuate? Of course, we have already laid a little bit of background knowledge using COVID-19 as, using COVID-19 as a simple example to how the market moves. The market is always fluctuating. Price is always fluctuating. The price of rice as it was in 2021, January, wasn't what it is, what it was in December 2021. Price is always fluctuating. And this is simply because of the forces of demand and supply. So Forex, also currencies, the value of currencies is also fluctuating because of the forces of demand and supply. Demand and supply can come in various ways. It can come in the way of foreign direct investment. It can come in the way of maybe a country has economic challenges and foreign investors are taking away their money from there. What are they doing? They are selling your currency and taking their money out of your country. Or maybe there's political crisis or coup d'etat and people are running away. So buying and selling, demand and supply, is either people are bringing money into your country to buy or to invest. That is bringing more money. So it means that they believe in your country's economy to grow. And when that kind of action is done, there is a positive outlook on your country and on the value of your currency, which causes it to appreciate. It means that there is more demand for your country, for your country's economy and the currency it represents. But when people are taking money away, it's supply. They are selling, all right, and taking money out, it devalues, all right? People don't believe in it. So these are the things that causes currencies to fluctuate, all right? So currencies reflect the health of an economy. So if people believe that the country's economy is appreciating, they also believe that the currency will appreciate. So when key economic figureheads such as the president or the central bank governors are making statements, those statements are really heavy, because if the statement is depicting gloom, it means doom. It is going to make the currencies to go down. But when people are reading out good economic figures, that the country grew by this percentage, Inflation has reduced, interest rates remain stable. This portends or reflects positivity in that country, and it will cause the currency to grow. So we are going to be looking at all of these fundamentals also, so we can understand how to read them. But this is how to understand that when you hear that a country's economy is doing well, it means that their currency is also going to appreciate. Now, let's go to understanding market size and liquidity. So the Forex market, we've already stated that the Forex market is the largest market in the world. So controlling over $7 trillion being traded every day. As you're listening to me now, I say it again, through your mobile phone, you can connect to this money and take a little piece, just a little piece, and the market will not even feel it. The money is enough to go around for everybody. All right. So the market is really, really big and has enormous advantages. Let me state some of them. One is sustainability. I don't know what businesses you may be doing right now. Some of them, maybe you've changed business 2 or 3 times because while you were doing, you saw that there's no more demand for it. You have moved to another one. The Forex market has remained the same. It hasn't changed. The common product that we use we trade there is money. And money does not have any nearest future of changing. Even when it has changed right now, which is cryptocurrencies, you can still trade cryptocurrencies on the Forex market. Some people, their main business now is selling of hand sanitizers and face masks. Very soon, COVID-19 will be out. And what do we have? That one is gone. Another new business will come. But the Forex market is very, very sustainable because money is always in demand. So learning how to trade this market puts you at a great advantage. What else? You have the ability to work from home, work from anywhere. No minimum capital to start trading, and you can start any day you start. This is the truth. Next, no competition. Personally, I don't like competition, especially when it comes to business competition. Well, you can't run away from it. But this is the only market where you are, you are not knocking on anybody's door. Please help me buy my product, or I want. Somebody is willing to sell to you. When you want to sell back that asset, you instantly, somebody at the other end of the computer is buying it from you. It doesn't matter the price. There's always somebody willing to buy at that price you want to sell. What else? No transaction cost. Cheaper than starting up any business, I can tell you. Just your laptop or your mobile phone and you're good to go. A 24 hours market, which we have explained. Unlimited income potential, which we know already. Then leverage and high liquidity. Leverage means ability to borrow money from the broker and trade. And high liquidity means you can always have somebody to buy. If even oil selling at $74 now, and you have oil that you have bought from the broker you want to sell, there is always somebody willing to buy it. Even at $80, somebody will still pick it up from you. All right. So that is what is meant by high liquidity. So let's look at the central drivers of price. You see, we're building our knowledge base. We're building gradually because we're headed somewhere. You need to understand everything, how this market works. So the central drivers of price, what are the major things that drives Forex prices or the price of assets in the Forex market? Number one, consumers and businesses, all right? Consumers and businesses, which is what we refer to as the economic health of a country's economy. So these are number one. Number two, monetary policies. I told you that the central bank are the major players in the Forex market. When they bring out monetary policies, these things affect interest rates. Okay, they affect interest rate, and interest rate is one of the major things that drives the market, that drives currency prices. Okay, that's exchange rates. Then we also have the fiscal policies, talking about taxations and government policies that affect the supply or demand of that country's currency. And then lastly, geopolitical events or politics. These are the main things that drive currencies, values of currencies in any country, name it. Now, the good thing is this. In the interaction of all of these four major drivers, as they drive prices, that price is going up, by one decision and coming down by another decision is being reflected on the Forex chart. So by the time I get to the point where I'm introducing you to the trading platform, you're going to see that all of those decisions all interplay and they are causing the chart to go up and down, up and down, up and down. Then it's through those movements of the charts that you're going to use to make a tradable decision. So I wrote there speculations from investors based on the outcome or perceived outcome of these four drivers is a significant factor behind currency pricing and fluctuations in the Forex market. So as a Forex trader, I'm looking at how is the event happening in the world affecting my trading chart. Those charts as it's going up and down, through those things, I can read what is happening in the world. And through those movements, I'm using it to make a trading decision. All right. So now that you see that all of these events all comes back and down to the chart, now that chart is the aspect of trading that we refer to as market analysis. Okay, conducting market analysis. Okay, market analysis comprises of all of this: the consumer health, consumers and businesses, monetary policies, fiscal policies, politics. This is what we refer to as market analysis. Okay, please, I hope you're flowing with me. All right, I hope you're flowing with me. I have to bring you down to the part I want to lead you through. All right, so if you're not understanding anything, please ask me. I will be happy to answer you. I see two chats. Joseph Abdullah says, can I get the video after the class? Yes, sure, please. Contact your account manager and the video. We're recording it. Your account manager will send you the video, okay? Understanding market analysis. Now, understanding market analysis. Market analysis is just the study of the market. All right, let's read what it says there. Market analysis, as the name implies, refers to the study of different phases of the market that can affect your trades. So we saw that there are four of them. Okay, we saw there are four of them. Now let's look at it again, how we now categorize them again. So phases of the market, we have the technical analysis, we have fundamental analysis, we have sentimental analysis, and we have risk analysis. Now, look at this. For everyone that wants to set up a business, yes? Jerry, okay, never understood this way. Thank you. Thank you to Jerry for that. Thank you for those positive comments. Now, for everyone that wants to open a business, you have to conduct what is called a SWOT analysis, SWOT, strengths of the business, threats of the business, weaknesses of the business, and opportunities. It's called a SWOT analysis. Because if you don't conduct this analysis, why should you invest money in something you don't know if there's an opportunity in it, if there is a weakness, if there's a threat? Maybe you're opening the business today and you didn't know that the government is already making a decision to close that sector. Nobody should import goods again into the country or import cars. Do you understand those kind of things? So that is called SWOT analysis. The same way in the Forex market, when you want to trade the Forex market, you need to conduct market analysis. You need to conduct market analysis to understand on what basis should I buy oil today? Why should I sell gold today? This is the point, all right? And we have categorized it into three: technical analysis, fundamental analysis, sentimental analysis. Risk analysis is exactly at the point you want to open a trade. Then we conduct risk analysis. So we'll come to that aspect when we start trading, okay? So let's proceed again. So let's start with the first one, technical analysis, okay? The first one, technical analysis. What is it? Technical analysis is the framework in which traders study price movement. Okay, simple definition, nothing complicated, nothing ambiguous about it. It's simply the analysis of the market wherein traders study price movement through what? The study of past market data and try to make decision on whether to buy or sell based on this study. Very simple definition, but it is very, very deep. Very, very deep. I'm going to get you to that depth, okay? Now, Fumilayo is raising a hand. Just ask your question, use the chat button. I'll be happy to answer you. Our technical analysis includes studying price charts on trading platforms, making use of the technical indicators, performing a wide range of possible actions with the trading platform. Now, let's get back to the simple definition again. As simple as it is, it's really deep. And let me try to break down how deep this is so you understand it. Now, we said that this is simply a study of price movement, a framework in which traders study what? Just price movement and try to make a decision whether to buy or sell based on this study. Why should somebody just make a decision to buy or to sell based on price going up or price going down? Let me show you an example of price. So this is what we're looking at. So if the market is going down, this is price going down, this is price going up, this is price going down, this is price going up. So why should someone make a decision to buy or sell based on this movement of price? The key word there is price. For you to understand why they take such decision, we have to ask deeper question. How do we define price in the context of market, in the context of a market? All right. Of course, we know that the market is a place where people buy and sell. Yes. And they buy based on demand and supply. So the price inherent of the price of any asset, all right, or the price as it is a derivative. Price is nothing, all right? Price is only derived from two things, all right? Price is a derivative of demand and supply. If there is no demand for any products, that's why you can walk past, trash on the street and you don't even blink because it has no value. No one is demanding for it. So the price of any asset is a derivative of its demand or its supply. Do you see that? So price is a derivative of demand and supply. I'm taking you to the deeper meaning why traders just look to buy or sell based on price movement. Now, if price is a derivative of demand and supply, who are the major players? Who are the major determinants of demand and supply? Of course, they are not trees, it's not animals, it's not your pet dog. They are humans. Humans are the major players that determine if this thing is worth my money, and the demand for it. Demanding means they are buying. They are buying into it. So follow the process. Price, a derivative of demand and supply. Demand and supply is basically determined by humans, living humans, not dead people, living humans. Now, can human action be predicted? Can you predict what a person will do? Well, if you put it in a general perspective, it's difficult. Like you are listening to me now, probably your internet is having problem and you are not a patient person. You just carry the laptop and you break it, okay? I cannot predict what you will do. No one can predict anybody based on general, phenomena, no. But when you bring in two factors, it is very, very likely I can predict what you will do. What are those two factors? Risk and reward. So almost anywhere in the world, anybody that is walking past $100 bill on the floor, he will look left and look right. If there's nobody looking at him, he will pick that money. Why? Because if he should pick it, it's a great reward for him. And almost anywhere in the world, people see fire, naturally, they're going to run away. So you can predict human action, especially when you bring in two factors into play, risk and reward. So you see, price, a factor of or a derivative of demand and supply. Demand and supply, a major 100% is being determined by human actions, and humans Their actions can be predicted, especially when it is based on risk and reward. So when humans see that there is a potential for gold to appreciate in value because of COVID-19, it is so easy to predict that everybody is going, or let's not say everybody, majority of the people are going to be buying gold. So this is easily predictable. So do you see, there is nothing gambling about this business as people think it is. It's just about understanding the logic, what drives the market, and how to trade it the right way. So when the market, those four interplays, consumer businesses, fiscal policies, monetary policies, geopolitics, when all of them are interacting and affecting the price of an asset, maybe oil or gold, and it's going up, going down, going up, coming down, you see that? Going up, coming down again. Now, all of these movements, okay, all of these movements tends to create psychological levels in the price, in the chart. So when you create psychological levels, traders, don't forget the definition of, let's go back again. Don't forget the definition. Let me take this out. Technical analysis, the framework in which traders study price movement, that is through the study of past market data, and try to make a decision whether to buy or sell based on this study. So when a trader looks in the past and sees that the price got to this level and it didn't go beyond this level, now went up, got to this level, didn't go beyond this level, came back down, did the same thing, went up again, and did not cross this level, the trader begins to imagine, oh, there must be something. You know, there must be something in the market why majority of the people believes that price will not go beyond this level. So you see, he begins to see a similarity in the action of traders worldwide. So when price begins to drop again back to this historical level, when it gets to this point, the trader believes that, oh, what has happened in the past is more likely going to happen again. So what happens? He buys from this level again, believing it will go up. Why? Because humans are predictable. It's just like having a child, and you just know that anytime you bring out candy, this is how he's going to react, because it's rewarding for him. So when people have studied the past market data and seen that in the past, people are, this level was rewarding. Whenever price got to this point, it was a good place to buy, because when you bought it at $1 here, it always rose up to $3 up here. You know, so something you bought for $1 in the past, it rose to $3. It happened the second time. When it gets back down here again, you'll be happy to buy, believing that price is going to rise up again to $3. So do you see this? So this is really how people make technical decisions to buy or to sell in the market. And don't forget, in the Forex market, you can make money when the price starts going down again. So I will still talk about all of that. So this is the market. This is exactly how it works. So we will be dedicating more of our time to technical analysis. Why? Because fundamental analysis is the one you listen to news. Of course, this is the second analysis we're talking about. Here you are listening to news, Bloomberg, CNN, Sky News. So here, what is Putin doing again? What is what's his name? Joe Biden. Xi Jinping, the president of China, right? So here we don't have control over what these people will say. So fundamental analysis is just you being aware what is happening in the world. Because in fundamental analysis, when major decisions are taken, they have the effect, the power to affect value of assets. It doesn't matter if it's presidents making a speech, even natural, environmental disaster, tsunamis, earthquakes, they can cause the price of assets to drop drastically. And then the third type of analysis we'll be looking at is the sentimental analysis. All right, what is sentimental analysis? Is simply trying to gauge the type of traders that is currently dominating a market. So just like elementary economics again, the more people are buying something, the higher will be the price. Why? Because there is higher demand for it. If there is no demand for any asset, the price will naturally go down because people just want to sell off. Imagine tomatoes, something that is going to perish. If nobody is buying it, the owners of those tomatoes will even be begging people, please just take at any price so this thing does not get spoiled or perish in my storehouse. So this is just it. So sentimental analysis is the study to understand who are the people majorly dominating the market at this time. So a market with a strong upward movement, all right, that's the price always appreciating, is said to be dominated by the bulls, B-U-L-L-S. In the financial market, in Forex trading, the bulls are the ones that buy. And the more they buy, they are driving price up. And when a market is to be going down, they said it is dominated by the bears. It's dominated by the bears. So sentimental analysis is just that study to help us understand, now that we're looking on our screen, who are the people majorly buying, who are the people majorly selling? Because I know you've heard it, the trend is your friend, they often say, all right? The trend is your friend. And this is the only market where you must go with the crowd. Don't do motivational speech in this one. No, I do my own things, I follow my principles. No, in this business, you have to find out where is the crowd. Where are they going? Are they buying or are they selling? That is where you should go to. Because anywhere that the more money is in, that's the direction the market will go to. If more people are buying gold, the price of gold is going to rise up. So don't say that, no, I believe in my principles, gold is going to go down. And then you will lose your money. Okay? So let's proceed. So the beauty of this then is that we're going to focus on technical analysis. And the good thing is technical analysis, in it we can derive technical analysis itself and sentimental analysis. Fundamental analysis is something we have to just keep listening to the news. So imagine now, out of 3, you can understand how 2 works. And the other one, which is fundamental, is something you just have to keep in touch. What is happening in the news? Is there another tsunami? Is there another war? Is there another economic, political crisis, geopolitical crisis? All of those things. So this is why we're going to focus our efforts to understand the chart. We're going to focus our efforts to understand how to read the chart, what the chart means, and how to interpret it. Because if you can understand it, it means you know technical analysis, it means you can derive sentimental analysis. And this is already 2/3. So it means that your trading decisions is going to be high probability you will be taking the right decision in the right direction. Okay, so let's get started understanding how the trading platform works. Okay, understanding how the trading platform works. So in case you've not downloaded the trading platform, this is where I'll need us to download it. So let me see, let's get to the trading platform. So let me take you there. Okay, so I'm taking you to another screen maybe. All right, so I trust you can see my screen. So Suraj, please ask the question. How is it different from stocks markets, please? All right, in stock market, when you're trading on stock market, you are buying a share of a company. Okay, you are now a part owner of a company. So when you buy that share, say at 10 naira, You're only making money when the share price of that company appreciates above 10 naira. Maybe it goes to 13 naira. It means you made 3 naira profit. In the forex market trading, you are trading on the difference of price movement. So you buy an asset. All right, this is very important. Let me see. Can I get you? Okay, I need to share all those screens again. Oh my God. So I want to share a screen to explain Suraj's question, because this is a very, very valid question. Augustine is also asking, how do I download the platform? Yeah, that's where we are. But please just allow me to answer the question of someone, Mr. Suraj. So let me share all screen, just a moment. So I trust you can see my screen, everyone. So, okay, you must wait for the price to appreciate above $10 to maybe $13 before you make profit. In the forex market, you bought at $10, all right, from the broker, and it appreciates to $13. You have made money, all right? You have also made $3. So how is it different? This is stocks, okay? STOCKS, and this is FX or derivatives. Now, then in stocks trading, if the market starts dropping from 13 back to 10, you are back to zero. You are back to normal, how much you entered with. But in FX, when the price gets to 13, you can sell, maybe you bought this gold. Let's say you bought 1 gram of gold at $10 and it has risen to $13. When it rises to $13, you sell it to somebody else that will be stupid enough to buy it at $13. You don't care. That's not your business. So right now you have $13 in your pocket. You cash out 13 in your money in your pocket. So let's say it has risen again to, don't forget you cashed out at $13. Yeah. So it has risen again now to $15, for example. And based on your analysis, you just know that, look, at $15, this price is not going to go above $15. That from $15, it's going to crash to 10. What do you do? This is the advantage of trading with a forex broker, because you can borrow money, you can borrow assets from the broker. So what do? You come to the broker and you borrow 1 gram of gold, 1G, let's say 1G. Don't forget, you borrowed 1G of gold because you know that it is selling at $15 now. Okay, so you come to Exco Trader, you say, Exco, please borrow me 1 gram of gold. And Exco gives you 1 gram of gold. Then you sold this to another person at $15. Now, you don't have gold in your account anymore. What you now have is $15. I hope you're following me. Now, what you have is $15 in your account. Don't forget, Esco wants you to return its 1 gram of gold. What they gave you was 1 gram of gold, not $15. So, but you want to make money from that gold they gave to you. So you sold it again at $15 to somebody else. You sold that gram of gold at $15. So what you now have in your account is $15. But now your analysis now works out. Your analysis worked out that the price of gold now dropped to 10. Don't forget, you had $15 in your account. So, and you no longer have that grammage of gold in your account. So what you have is $15. So when gold dropped, the same 1G of gold now dropped to $10, what do? You use $15 to buy it cheaper at $10. Okay? And then you return 1 gram of gold back to Exco and you keep your $5. So this is it. This is how you make money. This is how it is different from stocks. So you make money going up, you make money coming down. In making money when it's coming down is that you are borrowing an asset from the broker and you are selling it to somebody else. It's just like borrowing a Mercedes-Benz, a brand new Mercedes-Benz. You know, you borrowed it from somebody and you sold it. Then later, when the new Mercedes-Benz now has crashed, the price has crashed. You bought it back at a cheaper price and returned it back to your friend. There is no scratch, no nothing. But this time around, you have made more money because you bought it at a different price than you sold it earlier. Okay, so I hope you understood that answer now. Who asked that question again? Simon is asking, how does the MetaTrader work? We're coming to that. So I hope it was answered. Suraj, right? He said, I'm actually referring to the analysis where one starts studying the ups and downs of the markets. Looks like that's what they do for stocks trading. Okay, yes, every asset class, you must do this analysis. Very true, very, very true. Okay, so let's go to downloading of the trading platform. All right, so we are on the website of Exco. So to download the trading platform, you need to come to platforms, MetaTrader, MT4. Okay. So once you come to this point, to some of you that may not have it, let me paste it on the chat box. So you can click on the link and download it. So come to the download screen. You can download for Windows, download for your mobile Android phone, or download for App Store. Okay, any device you are using, please download it. Click on it, and it will start downloading. Okay, once it downloads on your mobile phone, please search on your Google Play Store for MT4 or MetaTrader 4. And you should find it, then you download it on your platform. When you download it, this is what it should look like. Just a moment. Okay, so this is even that S&P 500 I was talking to you about. S&P 500, I have a trade on it since when? This was on the 31st. I placed this trade on 31st. Anyway, I didn't buy so much, but I'm making $8.65 right now. This market is always appreciating. Look at this date. This is since 2020. Can you see? If you can see here, just look at this point. Look at the date under here, June 2020. It's just rising. This is the top 500 companies in the world, in USA 500. The share price is just always rising. So if you just buy, just leave it. It's gonna always make you money. This is just the truth. Okay, so let's look at how to log in. So once you've downloaded the platform, so we're on the desktop section now. You download it, you're going to find, once it downloads, it will show you something like this, logged into trade platform. Okay, login into trade platform, and that's where you'll get, you'll check your email for your trading platform login details. So please, for everyone that has opened an account, check in your email for your trading account login details. Trading account login details. Once you've seen that or gotten that, you can now infuse the login and the password. For the server, please you select RSG Finance Live. RSG Finance is our official registration name, so you'll see it here, RSG Finance. So, but our website name is Exco Trader, but on legal documents, we are RSG Finance Limited. Okay, so once you've done this download, once you've made this download and you've successfully signed in, you should see your counter working, the network speed, and you should also see the market watch, this point, the clock counting. So once the clock is counting and there's movement on this chart, you're fine. You've logged in successfully. Okay. So let's go in. Let's get back to let's get back to the what do you call it now? To the slide, so we can follow the curriculum as it should. So let's start with how to read Forex quotes. How to read Forex quotes. Okay, thank God says, how long will escrow bear with you for the money you borrow from them? As long as possible. As it doesn't, we don't, as long as possible. Okay, as long as possible. So you borrow, the money stays with you, but don't lose the money. Anyway, you can't lose it. Our system is well programmed that you cannot lose our money. Okay, so that's the truth. So let's start with reading a Forex chart. How to read Forex quotes, rather. How to read Forex quotes. Now, here we have Euro against USD. Euro against USD. And what this means is Euro is exchanging against USD at a rate of 1.4745. So let me share with you again the chart, okay? So if you're looking at this chart, just a moment. If you're looking at this chart, let's go to AUD-CHF, for example. What this means, AUD-CHF means that CHF, all right, 1 unit of Australian dollar, look to the top left here. 1 unit of Australian dollar is exchanging that you require 0.6634 units of Swiss franc to buy 1 unit of Australian dollar. So let's go back to our presentation. So what this means is that you require $1.4745 to buy 1 unit of euro. Now, this is just what it means. Now, to break it down, let's assume most people I see from the names are connected from Nigeria. So let's say we have here USD NGN equal to, I think it's about 570 now. So what does this mean? This is just the exchange rate. So what this means is that you need 570 NGN to buy 1 unit of dollar. So this is exactly what this is all about, the exchange rate. Okay, that's exactly what I'm trying to depict. Now, the currency to your left is always referred to as the base currency, while the one to the right is referred to as the quote currency. So this is the easiest way to understand the chart. So when you look at the chart again, so you see that from here going up means that Australian dollar, that you are requiring more Swiss franc, or let's even use Euro USD so that it will tally with what we're talking about. So take for instance, let me make this a bit thicker. Now take for instance, up here, you see that the chart is moving from up to down. So somewhere around here, you see the date 7th, 9th, 2021. On this date by 0000 midnight, you required $1.1822 to buy 1 euro. But looking at today, the price has dropped. Today is 5th. Look at the time. Look at the current price. Now, instead of requiring 0.18, you now need $1.13 to buy €1. So what does this mean? It means that euro has lost value to USD. But if the price was going up, let's look for a time that the price was going up. Okay, yeah, look at an example here. Sorry. So look at the time that the price was going up. Let's see the difference. So notice that here on the 31st of March 2021 here, or 30th of March 2021, you required $1.17 to buy €1. But somewhere here on 26th of this is June, yeah, or May, you now required 1.22. Can you see what this means? Is that the base currency, that's euro, is appreciating against the dollar, So if you had your analysis, it means you needed to buy euro here, and when it gets to this point, you sell it again. And whereas here, it meant that you needed to borrow, what do you call it, euro, and sell it here, so that when it comes back down, you buy it back. Or that's it. Let me don't complicate it and make us confused. So it means that here you just needed to click sell. Let me don't say, I don't want to make it more complex. So it means that when you perceive that the price is going to drop from here to here, you just come here and click sell. I hope we are understanding and we're following. Yes? Great. So let's move on to the introductions. Yes? To the trading platform. So we have, what is a pip? Pip, this is the unit of measurement to express the change in value between two currencies. So let's, the unit of measurement to express the change in the value between two currencies. So if we say the Euro USD moved from 1.3719 to 1.3720, notice that it's just the fourth decimal place that moved, increased by 1. So that small movement, 1 decimal point movement, is what is referred to as 1 pip. So when it moved from 1.3719 to 1.3720, we say that it has moved by 1 pip. Then anyway, any direction it moves. Okay, someone is asking, what if it moves down? So if we have 1.3719 and it moves to 1.8, it has also moved by 1 pip. Pip is not in minus. We cannot represent it as minus 1 pip. Yes. Either it goes up or down, it is referred to as 1 pip. So let's move. Now we have what is called a fractional pip. A fractional pip or pipette. This is for when a broker represents its exchange rate with 5 decimal points. Okay, with 5 decimal points. So here we see if Euro USD moves by 1.37190 to 1.37191, it moved by the 5th decimal place, which is what we refer to as a pipette. It's what we refer to as a pipette. So let's go in. Everything we're talking about here is very important. So let me show you the charts, because as we progress, it's important to always see exactly what we have. Okay, so here we have 1.13098. You see, it has moved 2 pips or 2 pipettes. Do you see that? So it keeps moving. It keeps moving up, up, down, up, down. So you just need to keep watching here to see exactly by what pipette or pips the market is moving. So this is what we're referring to. So if the price is going up, we know we can calculate by how many pips it has gone up. And if it goes down, we can calculate by how many pips it's going down. Okay, so let's go to the next one. Now we're looking at lots. Lot size. What is a lot size? I wouldn't want to ask. What is a lot size? It says what? This refers to the standard grouped size in which currencies may be traded. So just like we have, what do you call it? You know, you go to the market and you are not allowed to buy, 5 grains of rice, 500 grains of, beans or whatever. You have to buy it in a grouped size that is referred to as mudu bags. Yes, thank you for that. Okay, so you have to buy it in a group size called mudu or in bags. All right. So same thing in the Forex market. When you come to the Forex market and you want to trade, you cannot come to Exco Trader and say, oh, Exco, please sell me $1.50. No, it is only bought or sold in a group size that we refer to as lots. All right, that we refer to as lots. So these lots are we call them micro lots. That means you're buying $1,000. You see, so some of you that will fund your account with $100, you'll be wondering, and this is the smallest, this is the minimum you can trade on the Forex market. So you'll be wondering, how is it that I funded my account with $100 and right now I can trade with one lot or 0.1 lot, or I can buy $1,000. Okay, so this is it. This is this is the smallest, or the smallest unit in which anybody can trade the Forex market. Okay, so let's go to the second one, which is mini lot size. So this is the mini lot. Okay, let's get to the mini lot. Mini lot is when you buy or sell 10,000 units. All right, and then we have the big standard lot, a group size of $100,000. Now, for each people, because I'm telling you something, this is where greed, or yes, let's use the word greed. This is where greed starts in Forex. This is where people begin to lose their money. Because here you're going to see the potential why people love Forex so much, because this is where you can make money really easily. Okay, now when you are trading with a standard lot size, $100,000, okay, for you to trade with $100,000 on Exco, I think you just need to fund your account with like $200. We'll borrow you the rest. For every pip movement, you remember pip movement, if I go to the chart now, yes, you can see that from, it was in 1,013 something 00 before. See that it has moved 11 pips already. Just between 5 minutes, we have already moved 11 pips. Now, if you were trading with a standard lot size, for every pip movement, you are making $10. You are making $10. So for 11 pips, as we just saw now, this will be 11 times $10. So already in 5 minutes, you have made $110. But please watch it, because I'm telling you, this is where greed starts in Forex. By the time people see the potential of how much that they can even cash out every day, $500, $100, they become careless in money management. They start exposing their accounts to too much risk, trading with high lot size. And this is where the problem begins. So please, in this class, it's a 3-day course, first of all, to take you through the beginner course, to give you a foundation. Next week, we are starting a mentorship program, all right? In that mentorship program, that's where we're going to be teaching strategies and money management. So this is not where we're going to be teaching all of that. So you need to contact your account managers to know if you qualify to be in the mentorship class. It's going to be a 5 days course, 5 days program where we're teaching strategies, money management, strategies that we are using to trade ourselves. All right. So please, if you want to qualify for it, if you want to be a part of it, contact your account managers. It's starting next week, Monday. For those of you that are in Abuja, you want to come to the class, why not come to the class and join us? It's also going to be broadcast online, so you can join on Zoom from the comfort of your office. So we'll be teaching strategies because this is a new year. People should start making money. So please don't fall victim of greed, trying to start making supernormal profits, you know, for every peak movement. I'm going to teach you how to mitigate that. All right. So that's the meaning of lot size. Lot size is the group size in which traders trade or in which currencies may be traded. Then leverage. What is leverage? Leverage is the ratio of a trader's funds to the size of the broker's credit. In other words, leverage is a borrowed capital to increase potential return. So you fund your account with $200 and the broker gives you leverage of 1:50. What does it mean? For every $1, the broker is giving you $50. So when you have $200, multiply it by 50, that will give you the amount of money that the broker has borrowed you, $10,000. You see that? So when you are opening your account, your Forex account, you will see it's there, select leverage. Here in ESCO, we give up to 1:1,000 leverage. So it means for every $1 you bring, the broker can borrow you $1,000 to trade. So this is the advantage, one of the biggest advantage in trading. Now, but what is margin? Margin in Forex is the amount of money that a trader needs to put forward in order to open a trade. So just like in your bank, you go to the bank, you want to borrow money from your bank. What would they ask for? They'll ask you for collateral. Hey, give us your car, give us your landed property, you know, let a guarantor sign for you, things like that. So in Forex, margin is like your guarantee why the broker should give you the money. But it's not expensive. You're going to see how much. When trading Forex on margin, you only need to pay a percentage of the full value of the position to open. This payment here does not mean you are losing the money. The money is just going to be kept in a little safe house, you know, before the broker will now give you the rest of the money. So this is derived from leverage offered by the broker. So example, broker's leverage like EXCO will give you 1:500. So margin deposit to open one lot. So we're asking now, if your broker gives you 1:500 leverage, so what is the amount of money that needs to be in your account for you to be able to trade $100,000? The formula is simple. You put the leverage, of course, 1:500 just means 1/500. Yes, and that's what we have here. Then you multiply it by the amount of money you want to trade. That is $100,000. So the amount of money that needs to be in your account is $200. So with just $200, you can trade up to $100,000. Now, what is balance, equity, margin, and free margin? Okay, so let's take it one after the other. So balance is the amount of money on your account after the last trade was closed. So looking at my account here, you see my account balance here is 6184.27. So this is my real money. This is the money I have right now as a balance in my account. So after the last trade I traded and closed this is my last, this is the amount in my account. Next one, equity. Equity is the sum of the balance and the current profit or loss of the account currently running plus swap. So notice this, look at my account balance, 6184. Then look at equity, 619. Why is it higher than the balance? Because we said equity is balance plus the profit or loss plus the swap. So you have to add the current floating profits the current swap, and the balance for you to get your equity. I hope that is understood. And then free margin. Free margin is the amount available to open your next trade. Free margin equals equity minus margin. Look at this, equity minus margin. Please don't worry, the video is there for you to watch again. These things, when you download your trading platform, you see and go through it, you'll see that it's very easy to understand. So you see, free margin is equity minus your free margin, okay, your margin. So free margin, equity minus your margin, and you get the value here. All right, so this is it. So it means I still have more money to open more trades, more money to open more trades. So let's get to the charts. We'll soon be wrapping up this first day. Tomorrow we continue again, but I want to be sure everyone has downloaded their platform. Okay, because this is actually where we're supposed to start off from tomorrow. You know, understanding the charts. So if anyone having any challenge, please let me know, because I want us to go through the trading platform, everyone being able to have downloaded it, everyone, so that this is where we're supposed to start tomorrow, so that as I'm showing you, you are also viewing it on your own side. All right, so today this is where we're supposed to stop. Introduction to hands-on practicals on the trading platform. Hands-on practicals on the trading platform. So, or should I continue? Anyway, let me see what someone has to say. I'm supercharged. Downloaded the platform. Thank you, Esco. Thank you, sir. All right. Thank you, Mr. Jerry. All right. So here we'll continue tomorrow. Please, I want everyone to be able to have downloaded this so that you can flow with the training. I wouldn't want it to be all theory. So we're going to continue same time tomorrow, 10 a.m. If you can make it, thank you. Okay, Frank also have downloaded the app. Thank you. You've downloaded, so all right, great, great. So everyone has downloaded, so please download it tomorrow and ask for the video, please. Contact your account manager. Yes, Esco on Exco platform, I posted the, look at this is the, for Joseph, this is the link to download. All right, just go to this link and you'll get it downloaded. So tomorrow we're going to continue from here, and we're going to make tremendous progress, because I want you to be seeing what we're teaching. All right, so we continue tomorrow, guys. See you tomorrow, same time, 10 a.m. Have a great day. If there is any question, please let me know and we'll take it up from there. But if there is none, contact your account managers and get the videos, rewatch it, and we'll continue. Have a great day, guys. Bye-bye.